right, good morning everyone. So once again, I'm going to try and walk everyone through the trades that I took and why I took them today on the S&P 500 index fund, the SPY fund. So let's just start into it. So here we are looking at the 1 minute chart using TradingView. And you can see we started off the day. We actually kind of come back. You can see pre-market, it's just very bearish, right? You can see this kind of trend coming down here. Now, I'm not drawing this super straight. It doesn't really matter. I'm just looking at the overall trend. So you can tell we were already in a bearish trend, few pullbacks, nothing major, lower lows, lower highs. So we were definitely in a bearish trend coming into the open. We can even look down here again, bearish trend. If we wanted to look at a little bit longer of a chart, you can look at the 5 minute chart. Here we are coming into the open. You can see it just coming straight down. We want to look at the 15 minute chart. Again, we saw it come up and then just boom, came all the way down a little bit. This isn't really indicative of what we saw. But let's get back to the 1 minute chart and see where we started out here. So knowing that we were already in a bearish trend on the 1 minute chart, one of the benefits to the 1 minute chart is that we're able to pick up changes in the trend much quicker because we're seeing things happen faster. The downside to a 1 minute chart is that you're going to get a lot more false breakouts, false changes in the direction of the trend because we're not looking at a wider range. We're seeing the micro moves, not the macro moves. So it's important when you're using those shorter time frames, you've got to be on it, right? You have to be quick on your entries, quick on your exits. The difference in 1 or 2 seconds can be the difference between making your money and not making your money. So here we are. We opened up. We were already in this bearish trend. And I'll be honest, I wanted to enter a put just off the open, just based on this trend, but I didn't. Historically, that's bit me pretty good in the past, entering these trades, especially that first bar tends to kind of jump up and down. And so if I have a stop loss in there, quite often if I enter, it's going to hit that stop loss almost immediately on the first bar. It just seems like when the market's open, they have to flush out a bunch. And so you see this massive movement both up and down. So if you've entered a trade, there's a good chance that your stop loss gets triggered just in that liquidity sweep, I guess, as people are entering and closing out previous days. So here we were, we still see this quick downtrend, right? Just right off the open, very bearish. And then we kind of see this rebound here. So we came down and we started to see some bullish bars. These next 4 bars were very bullish. And then what did we see? Again, another 2 bearish bars. Now the difference was we see this one right here. What is that? At 638. And it came down, closed out almost at the same bottom as that previous low. The next following bar closed just below it. At that point, I almost took that entry into a put option. And hey, I think this might continue to go down. We're in this bearish trend. But when I looked at the wick actually fell short of the wick on the previous low. So I wasn't feeling super confident. And the next bar gaps up a little bit. Not much, but it did gap up. Ends up being a doji. So not the area that I wanted to be in for basically a short or a put option. And then that next bar, we see a very bullish candle. And that candle came right up here, almost to the same previous high that we saw on the swing. So, I've been looking at the wick here, kind of right here at the same top, same highs. That following bar, that was my entry. I said, look, we've kind of hit this double bottom here. This one came up, tested that top, and here we start to see that reversal. So I entered right here at 411 with a 411 call. And there we see it run up. I ended up with a 15% win on this one. Took my profits up here, walked away. Felt pretty good about it, right? So we kind of saw that bullish reversal right here off of this, small double bottom. And when we did that, we started to create a new bullish trend. Oops. So let's go up here. This took a little bit to develop, and that's okay. So you kind of get this trend channel that we started to see. Now, we topped out right here, which, look at that, right there towards the top in the pre-market. We saw an area of resistance. And what did we see here? That same area of resistance. We see the wicks coming up. It was really testing, but ultimately these candlesticks started closing right about that same level of resistance. So definitely not an area where I wanted to continue to go long with additional calls. Not the way that I trade, not as a scalper and looking for those quick wins. And we started to see this pullback. Go figure, right? What goes up must come down. But we had already kind of started this bullish trend when we had this breakout off of that double bottom. And then all these bearish bars came back and just settled right here on this black line is the 50, and this bluish one is the 20 EMA. We saw them kind of consolidate right here. I like the 20, I like the 50. They're normally really good lines of support or resistance depending on the trend. And as we can see here, they really turned into levels of support. You can see all these bullish bars right there, every one of them coming right off of that 50. So really good place for support. And right here, this bar at 657 gapped up above these previous highs. Now, normally I would have taken this trade. Honestly, I don't know why I didn't, but had I taken this trade right in here, I definitely would have been a winner. Kind of regret not taking it. I don't know why I didn't. Hindsight's always 20/20. And then we just watched it continue to run up. But at that point, I just didn't feel confident getting into any more trades on this bullish run. So again, hindsight always 20/20. It's easy to second guess when you're looking back, but for whatever reason, I didn't take this. So then we started to see this bearish trend, and you can see right here it broke below that 50. So the 50 was no longer a line of support. That next bar, well below. We even see the wick of that candlestick well below the 20. Then we had this kind of semi-doji here. Not much movement. I went, okay, we're either about to start going back up to continue this bullish trend, or we're looking at a continuation bearish. And that next bar, boom, broke below, and I took a trade right here. I took a 412 put on that, and you can watch it just continue to drop down. I took another win here for 15%, or roughly so. And then again, look at this. Kind of hit this little double bottom, right? It comes down here, tries to pull back up, bottoms out again right at this level of support. Kind of starts to consolidate, and we see again a couple of very bullish bars. And again, more consolidation right in here. Just kind of stalled out, right? And then we start to see these bullish candlesticks again coming off of this area of consolidation. You see these nice long wicks. This is showing, hey, they were trying to go lower. Bulls came in, started pushing it back up, and then we start seeing these bullish candlesticks. And right here, again, another candlestick that broke above. It broke above. And so I entered a trade here and almost got stopped out. It came up, did not hit my target where I wanted it to be. Now, my profit targets are always coming off of the price of the option itself with a stop loss. I try to go 10% and then a 15%, 10% stop and a 15% profit. So this one didn't hit my 15%. It just didn't go far enough. Luckily, when it pulled back, again, didn't hit my stop loss, and I ended up getting my win up in this area at 15%. Not exactly the way I wanted that one to play out, not the way I thought it was going to play out. Was not expecting this big pullback. I got extremely lucky that I didn't get stopped out here. In all fairness, I should have been, but I didn't. And then we move forward. We saw it come up here, kind of, almost coming up to that previous high, and then we see the sell-off. And we came back down here. Considering we were now in a more bullish trend, you can see where we started to come up here. Look at that. Almost perfect. Those are the tops. You can see that trend forming. But what concerned me was in this area where we hit a new low, right? We came up, hit a higher low, higher high, but then dropped all the way back down here for a lower low. It's normally not a good sign of a continuation of a bullish trend, which kind of kept me from looking for more calls, especially since I was already in one and again took that profit up here. But because we were kind of still in this bullish trend, this wasn't an area that I wanted to take a new trade. I wasn't seeing anything that I liked, especially with this bearish bar here that sat right on the 50. I wasn't about to take a put on that one. Again, that 50 can be a really strong area of support. And then again, this bar broke below the 50. Now, a lot of times I would have taken that as a put option. But looking at where it came down, right here, right at the top of these bars right here. So I was really concerned that was going to be an area of support. A lot of times what starts off as an area of resistance ends up being an area of support later. And we really saw that, right? This next bar kind of came down. Again, here's that indicator that I told you about on the last time. Once I see that, I'm never going to, well, I don't want to say never, but I'm typically not going to enter another put option after I see this. Typically, with this particular indicator, it's normally a bar too late anyway. So if I see it, I'm not going to enter a put option on the next bar. Historically speaking, I know better. And so we came all the way up here, and again, just chop all this consolidation right in here. And I just looked at it and I went, this looks like it's setting up for a breakout. It's either going to break above or it's going to break below. And we just saw all these wicks, and then boom, look at this one. It's a bullish candle, but look how long that upper wick is. That tells me came way up here, and the bears came in, pushed that price back down. It was not about to go up there. So on this big bearish candle right here, where the wick came well below these previous lows, it actually came down right here to the bottom, but this was a sure sign of a breakout. Closed right at the bottom of these wicks with a wick below that, and I entered this trade right here and ended up, let's see what that was, a 412, another 412 put, took my profits down in here and walked away. That was actually my last trade of the day, to be honest with you. I took my wins and I walked out. Again, I typically don't trade past 11. Here we were 8:13 roughly when I took my profits. I walked away with an overall win of about 5% of my account for the day. But those were the trades that I took and why I took them, right? I like to see consolidation and a break out of that. Normally that sets you up for a good spike. As a scalper, you can get a nice quick win. This was the exception right here where I didn't quite hit my target, and then for whatever reason, I was lucky to not stop out in here. Got my win. Typically, I would have taken this loss. For whatever reason, it didn't hit. I don't know. Sometimes options are just weird to me. I can never figure out why. But if we want to walk through this, here we go, right? We had that break below. It spiked way down here, ended up kind of hitting this bottom again right in there. These actually fell a little bit short, and we start to see that bullish momentum coming back up. Typically speaking, looking at this, I might have taken a trade right here on this candlestick. I wouldn't have taken this one mainly because of where it stopped. Right here, that's a big area of resistance. And where did this stop? Right at that exact same area. So I wouldn't have entered here. Might have entered on this one, but again, look where it stopped. Another line of resistance. I mean, we're spot on. Even the wick, you look at where that wick stopped, right here at the same. If that isn't screaming resistance, I don't know what is. Again, look at that indicator. There's my buy indicator, which I mentioned before. I never enter that call after I've seen that. It's just a bad sign. You're normally entering too late. And what did it do? It barely came up, and then we start to see it sell off again. So here we are. We get that downtrend. We're above the 50. I'm not going to take a put option above the 50. Again, you can kind of see it just sits there on that 50. Breaks below it a little bit, but nothing significant. And again, not reaching any lower lows. So it's not really looking like a reversal in the trend. We've kind of, through this whole area, starting, right here around 7:45 Pacific, you really just kind of see everything going sideways. And it's not until right here at 8:53 that we start to see, we see all this consolidation for about 10 minutes, right? Kind of came down, comes down below the 50. Now we're starting to see this bearish trend. So we start looking through here, and we can kind of see this, right? Comes through here, comes through here, right? We're starting to see that bearish trend come down. And again, there's that consolidation. And I love these areas. I love when it consolidates like this. Think of it like pressure. It's like a water balloon. You don't see any movement. It's not really going anywhere, but there's volume. There's volume going into these trades, and you've got people going long, you've got people going short, and it's just building up. So when it breaks, you normally see a big movement in whatever direction it breaks. So right here on this candlestick at, what is that, 8:53, you see that candlestick break below. You see that consolidation break, and it actually closes out at the same level as the bottom of these wicks. And this wick actually closed, hit a new low below all of this. Perfect opportunity for that put option. I would have taken a 412 put option if I was still trading at that point in the day. I had already hit my profit target. I decided I didn't want to take chances on losing more money, losing the wins that I already had. But right here, right there at 411.27 or so, at the close of this candlestick, I would have taken that put option, and looking at where it went, probably would have gotten my 15% off of that trade as well. So let's close these out. Don't need more of those drawings. And so kind of came down here, and then we see it break again above that 50, and buy. Why? I have no idea why there would be a buy signal here. Really is not a good place to buy. You've got an overall bearish trend. Does not make any sense to buy right here. That is not a good sign of a reversal. If I was looking to go long, what we see here is you see that pullback, and then it comes down, and you want to see it retest. You want to see it retest that low. And it did, and it actually went below it. If I was going to enter a trade in this area, it would have been to go short. I would have been looking for put options, but I'm not going to buy a put option when it's really kind of bottoming out really around this previous low, and I'm still above the 50 moving average. So not a good place, right? Again, that 50 is a really good line of support or resistance. And again, you just kind of see this sideways movement, all that consolidation. There's a lot going on in the market today. So, it's not a good place to be. And here we see this candlestick, this bearish one start to come up, but again, kind of tops out right here at the same level of resistance. And then another one, boom, right here. But again, that candlestick right there at the same level, and we kind of see that rejection. Again, it's also kind of sitting here on the 50. Not a super strong move for me. Not one that I would like. It's probably 50-50 on this one, to be honest with you, if that's going to break out or not. You're coming off of, basically a rejection of a lower low. But for me, it wasn't enough wasn't enough. I wasn't even trading. But just looking at this chart, I would not have taken this one. It wasn't a strong enough move coming off of this choppiness through here. And lo and behold, right, hit that exact same top and rejected. And we see that sell-off. If I was going to take a trade, again, it would probably be a put. Overall, we're still looking at a bearish trend, even through all this consolidation. But this candlestick came short of the previous low. This one right there at the previous low. Nothing that's telling me, hey, I'm going lower. If anything, this is looking again like an area of support. So not an area that I would buy. And we start to see that rejection off of support and starts climbing up. So if I was going to take a call on this one, we've got this candlestick right here that hit that top. I would take a call right here. It's a break above the previous high. That candlestick, while it hit that exact same high, we've already seen 1, 2, 3, 4, 5, 6. These dojis don't really count. 7, 8, 9. 9 bullish bars all leading into this. That's a very strong movement. And you can see these averages are starting to move up. So yes, I would have taken a call right here, probably profited up in this area. Worst case scenario, I don't get my full profit, but run a trailing stop. You're going to get something here. We just see again kind of bouncing around. Nothing in here that tells me, hey, we've got a reversal. Maybe in this area right here if I was really wanted to go risky. But you take a candlestick like this, yes, it broke below, but it's got a pretty good wick pushing things back up. And we saw a little bit of movement. Again, here's that 20. It's a pretty good line of support. Just nothing that tells me, hey, this is definitely reversed. If I was going to go off of this, I would look for a retest in this area, which it did, right? We saw it pull back, hit that 50 as a line of resistance, came back, didn't even make it to the same bottom, right? Kind of came back up here. If I was going to go long, we're kind of starting to see that bullish trend, I probably would have taken it right here, right there on that candlestick at 1032. A break above all of the previous highs, very strong momentum. Guess what? I probably would have got stopped out on that one. Just is, right? It ended up kind of being a false breakout. It wasn't, but it was at the same time. We saw 2 more retests. 1, 2, 3, 4 retests of that low. And then right here, boom, look at that. That big, strong, bullish candlestick right at 1052. That screams a call. Just screams. If you saw this, that was a good place to enter. We were already starting to see that bullish trend form right here, and then that break above, fantastic. Again, it's always easy to spot this stuff after the fact, especially when you can see the continuation, but these are the things that I look for to enter a trade. Easily would have taken my profit right before 11 o'clock. Easily hit my profit target up here, and then I would have been done for the day, because again, I don't trade past 11. So these are the trades that I did take and I would have taken, and why. There's a good chance that 1 or 2 of these I might have gotten stopped out on. They looked good, probably weren't the greatest. Again, some of those are probably like 50-50. Were they going to make it or not? That's the art of trading, right? It's risk management. Run your stop loss. Make sure you know where you're going to take profits. If you want to have a hard set profit target, make sure it's set. You either hit it or you don't. You either made a good trade or you didn't. But by good risk management, you can maximize your profits and minimize your losses. And that's how you become a profitable trader. Now, again, I'm not a professional trader. This is not financial advice. This is just what I did today and what I would have done. Again, previous performance is not indicative of future performance. So just because it worked today doesn't mean it'll work for tomorrow. It also doesn't mean what worked for me is going to work for you. I always see people taking trades that I look at and say, why would you ever have taken that trade? And next thing I know, they've got 100% profit on it. Go figure. So we all see things different. We all have different risk tolerance, and we're going to enter and take our losses and profits in different places. But again, this is where I would have taken mine. So I hope you enjoyed this video. I hope you learned a little bit from it. I'll start marking these up a little bit better. It might be easier to read. You can see the market is still going live today. Kind of a crazy day. A lot of different things happening, but these are the trades that I would have taken. Hope you learned something. Hope you enjoyed it. Maybe what you learned was what not to do. So as long as you're learning, that's the important thing. So again, hope you enjoyed this. Hit that like button, subscribe to my channel. If you have any questions, I'd love to collaborate with you. Working with From the Bottom Trading Group, great group of people, always learning and working together, collaborating. Find yourself that group. So again, hit that like button, subscribe to my channel. Love to see you guys out there making money, padding your retirement accounts, or just retiring altogether and making this your career. So thanks, everyone. Hope you have a great day. Safe trading. Always run a stop loss.